Hi, it's time for a Minute with Mitch. I am at a Kestra meeting and just stepped out for a few minutes. We just finished up with Kara Murphy, who is the Chief Investment Officer at Kestra. And we've obviously been going over investments, inflation, market volatility, and the economy. The recent CPI numbers, inflation, came out just a few days ago, and they came in at about 8.3%, slightly down from these high numbers of 8.5%. It looks like, however, most economists are in agreement we have reached the peak for inflation, and the numbers where they are peaking now and slightly coming down looks like they'll help support the stock market. So we are continuing to watch this and hope things drop down. As you know, the Fed has now had two interest rate hikes recently, 25 basis points and 50 basis points just about 2 weeks ago. There is talk, of course, of more rate hikes going forward, but it may actually slow down as we get towards the end of the year or early into 2023. The Fed has to be extremely careful to make sure we're not in a recession and get thrown into a recession. So some economists now believe that the Fed may actually continue to hike up the rates, stop it, and then possibly have some rate cuts. But that's probably later in 2023 that we're going to look at that. Some areas that are doing well are defensive stocks, which would be consumer staples and value. As you know, value has trailed growth for many, many years now, but they tend to have lower price to earnings ratios, and that's where the market has been headed and still continues to head. So we are going to continue to lean that path and look at that path. Consumer staples, managed volatility, which has a lot of consumer staples, and value stocks. When I finish up the meeting, I'll come out with some more information shortly. For now, a Minute with Mitch, live from our economic update meeting. Thank you.